Welcome everyone to this webinar about the Corporate Sustainability Reporting Directive, the CSRD. My name is Karin Ekberg and I'm the CEO of Leadership and Sustainability. I have a long experience in the sustainability area. And I would just like to give you some basics about the Zoom webinar platform. You will all be muted during the webinar in order to ensure the best audio quality. But please feel free to send us any questions during the presentation via the question function. On the right-hand side, you can see a screenshot of the webinar window. And here you can find the button to open the Q&A window. You can type in your question and you send it to us. And perhaps it's good for you to know that we will provide you with a link to both the recording and the presentation after the webinar. It might take 1 or 2 days until we do that, but you will receive it, rest assured. And let us have a look at the agenda for today. We will start by introducing the Corporate Sustainability Directive, in short, CSRD. We will cover what the CSRD is about and what are the main aspects of the legislation and who is subject to the CSRD. Then we will look at the European Sustainability Reporting Standards that are strongly linked to the CSRD. These are known as ESRS, and we will talk about the standards in general. We will talk also about the ESRS standard, about general requirements, and then we will talk about the ESRS 2 standard, the general disclosure standard, and the other standards, the so-called topical standards. And we will also cover the materiality assessment. We will give you a brief introduction into the concept, what will be material under the double materiality assessment, and how to conduct a materiality assessment. And we will give you an outlook on how to prepare for the CSRD and how we at Leadership and Sustainability can support you with this, of course, as well. And finally, we will respond to your questions. We will now start by looking at what the Corporate Sustainability Reporting Directive is and how it came to be. On January 5, the Corporate Sustainability Reporting Directive, the CSRD, entered into force. The CSRD will replace and modernize the previous non-financial reporting directive, the NFRD. And it will also standardize reporting rules concerning ESG, environment, social and governance information, and sets a broader scope for the reporting that is required in line with the CSRD for large companies, but also for SMEs. And a set of standards within the CSRD scope will be the mandatory reporting standards known as ESRS, that will set quite a detailed disclosure requirements for all companies. So let's dive deeper into the key aspects of the CSRD. As mentioned before, the scope has been broadened and requires over 50,000 companies in the European Union to comply to the CSRD. Consistency will be improved through a set of ESRS standards with comprehensive disclosure requirements. Some areas, oh, sorry, what am I doing here? I'm in the wrong, here we go. Can you still see the screen? I hope so. Okay, so some areas to disclose will include impacts, risks, opportunities, strategy, and targets of material topics. And just a comment about the term material. Materiality is originally a financial accounting concept and means that something is important enough to have a financial impact. In the area of ESG, it means that the topic, the impact, risk, or opportunity is significant, which means it is material. Then a third-party assurance is mandatory under the CSRD. At this point, the assurance is required at a limited level, which entails integration in the auditor's report, involvement of a key audit partner, scope to include European Union taxonomy and process to identify key relevant information. And the purpose of these requirements is to ensure the quality, transparency, and comparability of ESG information to the level of current financial disclosure. And lastly, the management report is to be submitted in electronic format, and this can be in the XHTML format in accordance with the European Single Electronic Format Regulation. And not the least, furthermore, the ESG report should be integrated with the annual financial report. So there will be no standalone sustainability reports anymore, or at least not as the only sustainability report. When do companies need to apply to the CSRD? There are several sets of ESRS standards that companies need to apply to. The first set of standards are the sector agnostic standards, so they are applicable to all sectors. These have been adopted this summer and will need to be applied in 2024. The following sets, such as the sector-specific standards, still need to be developed and have been postponed by 2 years. And more on this will come a bit later in this presentation. So companies will have to start reporting under CSRD using the first set of ESRS standards according to the following timetable. Starting from 2024, large listed companies that have already been subject to the non-financial reporting directive and large listed non-European Union companies. What is a listed company? Well, a listed company issues shares of its stock for trading on a stock exchange, simply said. So these are large listed companies, banks or large insurance companies, as well as parent companies of a large group with more than 500 employees. And the first sustainability statement needs to be published in 2025 for the 2024 information. Starting from 2025, other large listed companies, including other large non-European Union listed companies that were not subject to NFRD, need to start reporting for 2025 and publish their first sustainability statement in 2026. They only need to report if they fulfill at least 2 of the following 3 criteria: turnover exceeding euro 40 million per year, total assets exceeding 20 million euro, and or more than 250 employees. Then we have the listed small and medium enterprises, the SMEs. They should be subject to reporting starting in 2026. And medium-sized SMEs fulfill at least 2 criteria. They are below than 40 million, but they are in their turnover, but they are above 8 million. And they are between 4 million and 20 million on the balance sheet, and they are between 50 and 250 employees. So small companies, they are then below these numbers, and then there are even micro enterprises as a definition. So small companies, they are below 4 million on the balance sheet, 8 million on the turnover, and 50 employees. So there are also criteria then for micro companies. So the small companies still should be above these criteria. So the micro enterprises, they have a balance sheet of up to 350,000 and a turnover up to 700,000 and an average number of employees up to 10. So the European Union has not yet adopted reporting standards applicable to the timing and scope. They have not adopted reporting standards applicable to listed SMEs, which has led to some uncertainty related to the timing and scope of reporting obligations. So there is some uncertainty here. Listed SMEs, they may eventually report by using less indicators than the larger ones, and the standard, it is currently under development by EFRAG. And listed SMEs, they may also opt out of reporting requirements for 2 additional years, meaning they could wait to start reporting as late as 2028. And while the CSRD doesn't introduce new requirements for unlisted small and medium-sized enterprises unless they are capital-oriented, the European Union Commission intends to establish separate sustainability reporting standards also for these types of business in the future. And lastly, non-European Union companies that generate over 150 million euro per year in the European Union and that have either a branch with a turnover exceeding 40 million euro or a subsidiary that is a large company or a listed SME in the European Union, they will also have to report on the sustainability impacts at the group level from the financial year of 2028. So their first sustainability statement needs to be published in 2029. So quite complex rules, I would say, but this is the fact, how it is. And then let us move on now to the first set of the European sustainability reporting standards, and they include the cross-cutting standards and standards for disclosing environmental, social, and governance information. The cross-cutting standards are the ESRS for general requirements and the ESRS 2 for general disclosure. And then there are also topical standards that are not industry specific. These standards include environmental matters, such as ESRS E1 for climate change, the second one for pollution, and then we have for water and marine resources, for biodiversity, resource use. And on the social side, we also have for own workforce, workers, affected communities, and consumers and end users. And finally, for governance matters, we have the G1 for business conduct. And the only ESRS 2 disclosures will be mandatory irrespective of materiality. And here is where the materiality assessment comes in. So some ESRS contain a list of disclosure requirements that may be phased in over time. These include, for example, the 3-year window to obtain information from the value chain if not all necessary information on the value chain is readily available, and other phase-ins of between 1 and 3 years for other requirements that were deemed more challenging for companies. And for example, in the first year of applying the standards, companies with fewer than 750 employees may omit Scope 3 greenhouse gas emissions data and disregard the disclosure requirements specified in the standard on their own workforce. Also, in the first 2 years of applying the standards, the companies may disregard other disclosure requirements, including the standards on biodiversity, workers in the value chain, affected communities, and consumers. In the first year of applying the standards, all companies may disregard requirements about anticipated financial effects related to non-climate environmental issues and omit certain data points related to their own workforce. Some disclosures are voluntary. For instance, in the revised standard drafts, company can decide whether they want to explain why they may consider a certain sustainability topic to not be material. Previously, this was mandatory. A second set of standards will be developed by the EFRAG, the European Financial Reporting Advisory Group, next year. These include SMEs, proportionate standards, and sector-specific standards, for example, mining, food and beverages, and textile, initially set for June 2024. And in this October, so this past month, in the 2024 Commission Work Programme, an agenda detailing the actions slated for the forthcoming year introduced a postponement of 2 years for some parts. So this concerns sector-specific sustainability disclosures. And yeah, so it's quite complicated and it's not all set at all at the right now. So there is still a lot in development and a lot in flux, let's say. And then if we move on here, and we will go into depth now about the ESRS, the European Sustainability Reporting Standards. The aim of the European Sustainability Reporting Standards is to specify the information to disclose in accordance with CSRD about material impacts, risks, and opportunities in relation to environmental, social, and governance sustainability matters, to advance the scope and quality of corporate sustainability reporting, to promote sustainability development through transparency. And here is just as a reminder, the slide we just looked at with the structure of the ESRS. And so ESRS 1 contains mandatory principles for the preparation and disclosure of the sustainability statements in accordance with the CSRD. It includes categories of standards and disclosure in ESRS, meaning companies need to disclose in accordance with the applicable ESRS. Cross-cutting and topical standards, all the material information regarding impacts, risks, and opportunities in relation to ESG matters. Qualitative characteristics of information. When preparing the sustainability statements, a company shall apply the fundamental qualitative characteristics of information, so it needs to be relevant and faithful. The enhancing qualitative characteristics of information, for example, comparability, verifiability, and ease of understanding. And it also includes the requirement of double materiality as the basis for sustainability disclosures. And we will talk more about double materiality very soon. The requirements of sustainability due diligence. This describes the process by which companies identify, prevent, mitigate, and account for how they address the actual and potential negative impacts on the environment and people connected with their business. The core elements of due diligence are reflected in the ESRS 2 disclosure requirement set. Then we have the value chain, and the information provided in the sustainability statements need to include information on the material impacts, risks, and opportunities connected to a company's direct and indirect business relationships in the upstream and or downstream value chain. So very clearly, we are not talking only about your own company, we are talking about your entire value chain. What happens upstream, up to the farms, up to the mines, and what happens downstream, down to the end of life or the second life of your products. And then we have the time horizons. The materiality of a sustainability topic should be assessed over the whole value chain and over all time horizons. It also includes general requirements to be applied when preparing. Sorry, now I went a bit too fast. So it also includes information about the, wait a second, I need to see where I am now. Yeah, the time horizons. So the materiality of a sustainability topic should be assessed over the whole value chain and over all time horizons. And it also includes general requirements to be applied when preparing and presenting the information. And then we have the structure and presentation of the information about sustainability matters in compliance with the CSRD and the ESRS. In the management report, we also have requirements on how to link information. A company should offer information in its sustainability statement that allows users and readers to understand how the impacts, risks, and opportunities mentioned in the statement are linked to other information in its corporate reports. So it should not be just one page about your materiality assessment and then no linkage to all the different topics that you are reporting on. They should really be connected with each other. And then we have transitional provisions that refer to the fact that some of the necessary information regarding the value chain might not be available right away. So companies can, during the first 3 years, as I already mentioned, explain the efforts made to obtain the value chain information and the reasons why this information could not be obtained and the plans to obtain such information in the future. So you don't need to have everything in place from the very beginning. So these were the general requirements, the ESRS 1. And now let's just have a look at the ESRS 2, the general disclosure. The ESRS 2 determines the general characteristics and information such as policies, measures, and objectives that must be reported, regardless of the outcome of the materiality assessment. Your materiality assessment will impact the topical standards and what you report from there, but ESRS 2 needs to be reported in full. The disclosure layers of the ESRS are sector agnostic, so they are not limited to a specific industry. And that's the first level. And then you have the sector specific and you have the entity specific. And in addition, ESRS 2 specifies the structure and the content of the ESRS topical standards. It defines a total of 4 disclosure pillars: the governance pillar, the strategy pillar, the impact, risk, and opportunity pillar, and finally, the metrics and targets pillar, which is how to measure performance, including targets to meet them. So those are the 4 pillars we have below the ESRS 2, the general disclosure. And as an example, I just want to dive more into the disclosure pillar in impact, risk, and opportunity management. So it's divided into 3 subsections: disclosures on the materiality assessment process, reporting on opportunities, and disclosure content on policies and actions. And in the first section, you see a long list here. The disclosure requirements concern the description of the process to identify and assess material impacts, risks, and opportunities. It should also include a description of the used methodologies and assumptions in the identification and assessment processes. And it should include an overview of the process used to identify, assess, and prioritize the potential and actual impacts on people and the environment. And we also have the overview of the process to use to identify, assess, and prioritize the sustainability-related risks and opportunities having financial effects. So here is also a lot of information that should be included. And in the second section, reporting on opportunities, companies need to consider the materiality of the information to be disclosed. So this is to help readers understand the significance of them. In this context, it shall consider, among other factors, whether the opportunity is currently being pursued and is incorporated into its general strategy, and whether the inclusion of quantitative measures of financial effects is appropriate, taking into account the number of assumptions that it could require and also the uncertainty that it leads to. And the final section sets out disclosure content to include when a company discloses information on its policies and actions to address material impacts, risks, and opportunities. So collectively to manage material sustainability matters. So this means that policy should be described to include, among others, the key content of them, the scope in terms of activities, value chain, geographies, and if relevant, affected stakeholder groups, as well as the most senior level in the organization to be accountable for the implementation. Actions need to include information about the list of key activities, etc. And furthermore, when the implementation of an action plan requires significant operational expenditures or capital expenditures, a company needs to inform about the type and amount of current and future financial and other resources linked to the action plan, and provide also complementary explanations. So there is a lot of information that you will need to report on. And now let's come to the topical standards, which have a bit more tangible meat, let's say. So they cover reporting content on environmental topic, the first bucket. And in some cases, they also require reporting on how to manage the transition to a sustainable business model, plans to achieve this, and how to contribute to achieving the environmental goals of the European Union Green Deal. And you can see the different subtopics here. We have climate change, pollution, water and marine resources, etc. And then on the social side, we have here also the own workforce, workers, affected communities, and consumers and end users. And these standards here, the social standards, they require only qualitative information. And the governance standards finally gives a better understanding of a company's strategy, processes, and performance. And you will specify the information to disclose about governance factors. So the role of the administrative, performance, and supervisory bodies, internal control and risk management systems, business ethics and corporate culture, including anti-corruption, anti-bribery, and animal welfare, and management and quality of relationship with customers, suppliers, and communities. And many of you who belong to significant, large listed companies, you will already be aware of these requirements. These are mostly areas that you already cover in your governance program, but perhaps for smaller companies or for companies that are not listed, these questions may be quite new actually. All right, so now let's talk about double materiality, a very, very often discussed topic. And it is a crucial part of the CSRD. So let's have a look. The double materiality is the basis for the sustainability reporting under the CSRD. Through the double materiality, companies will identify their most material ESG impacts, as well as risks and opportunities on their perhaps financial performance, but also in general. And it will dictate the topical disclosures companies must report on to meet the requirements in the CSRD. So you should report on what is material to your business. And double materiality is the concept that provides criteria for the determination of whether a sustainability topic or information must be included in the sustainability report. Double materiality is the union of financial materiality and more scientific, let's say, impact materiality. Impact materiality refers to an inside-out perspective and looks at what impact a company has with its activities on the sustainability topic. And financial materiality refers to an outside-in perspective and looks at how a company's financial performance or development is impacted by a sustainability topic. So, for instance, a company's impact on the climate can also be financially material for the company. And you can see that representation here. And then, as mentioned, the double materiality assessment will determine whether a sustainability topic must be included in the sustainability report. This means a sustainability topic is material when it is material from a financial materiality perspective and or from an impact materiality perspective. So either or both. And so that's important to know. It can be many categories, may be both, but sometimes you have only one of the two, and then it is still material. And now let's talk about the role of the stakeholders. CSRD gives stakeholders an essential role as they can determine a company's material matters. And their stakeholder engagement is not an easy topic at all, in my view. You need a lot of fine-tuning and a lot of understanding how to best engage with your stakeholders in order to do that in a really effective manner. So, for example, to just send out a list of different sustainability topics or ESG topics to your stakeholders and then ask them to tell you which topics are most important for you, I feel that is not always the best approach, because do the stakeholders have enough information about your company? Do they have the information they need in order to really score for you which impact categories are the most important? I'm not so sure of that. So I think that there needs to be a more comprehensive and a more elaborated process in order to really get a qualitative, high quality feedback from your stakeholders. So, but they are really important, for sure, they are. So for each chosen sustainability topic, relevant stakeholders and users need to be identified and to decide on its materiality and the development of the related disclosure. And the materiality assessment process should ensure that the impact on all affected stakeholders is considered and not only the needs of users. And we will talk a bit about what this means. So, who are the stakeholders defined by the CSRD? Stakeholders are all those who affect or are affected by the company, but we differentiate between two different stakeholder groups. We have the affected stakeholders are those who are positively or negatively affected by the company's activities and their impact throughout the entire supply chain. Then we have the user stakeholders, and they are the ones who have an interest in the company. For instance, investors, credit institutions, and public authorities, business partners, non-governmental organizations, social partners, and other stakeholders. So this is the differentiation we have between affected stakeholders that are directly impacted, and then we have the user stakeholders that most of the time they have some stake in your company or an interest in your company. So before material topics were determined by their significance for the stakeholders and for the business. So you have all seen these matrices where the significance for the business and the significance for the stakeholders is included here. And then you have all your different ESG topics, and they are mapped along these axes here. Now, the environmental, social, governance impact, as well as the financial impact on the company, determine what topics are material. And this way, a broader scope of material topics can be covered. But please note that, in my view, this is a very, very simplified illustration. And it is not enough to only use this because it's very vague. And even if you have some topics, let's say here in the dark gray area, what are you going to do with these topics, and why are they there? And obviously, as you have heard, the requirements coming from the CSRD are much deeper than what this illustration can grant for. And we heard also that you need to account for your entire value chain, and this is what we always do. We really want to cover the entire value chain, looking at your business value chain and all the sustainability impact categories that may be relevant. And this is also a CSRD requirement. So these type of illustrations here, they are very good for very simplified communication. But for the deeper understanding, you need something else. You need the location in the value chain, and you need a more specific information about the impacts, risks, and opportunities. So, to sum it up, these are the steps when conducting a double materiality assessment. You start by identifying and engaging stakeholders to determine relevant sustainability matters. You define the potentially relevant value chain representation. Then you establish the potentially relevant sustainability matters. So you take the entire list from the ESRS and the topical standards, and you make your assessment over those topics. And then we have the steps 4 to 6, where impacts, risks, and opportunities need to be defined. We conduct the impact assessment. The impact is assessed on the severity, scale, scope, and irremediability of the impact and likelihood of the impact. And then we conduct also the financial assessment. And here, financial materiality will be assessed on the likelihood of occurrence and the potential magnitude also of a risk or opportunity. And lastly, your company needs to define its strategic implementations for disclosure on the determined material topics. So these are very simplified, of course, but still these are the steps. And now we will go more into detail and show you how we usually conduct our materiality assessment when we work with our clients. And so how is it really done? So let me give you a high-level overview of the method as we have developed it. We have developed this method over the past 20 years. We have always worked along the value chain and applied the different sustainability impact categories. And now in the past year, we have also adopted and adjusted the method to be really aligned with the guidelines in the CSRD on how to conduct the materiality assessment. So in the first step, we define the individual value chain of a company. Then we select the applicable sustainability impact categories for the analysis, social, environmental, and governance related, where the financial perspective is also included. And after these two steps, we conduct a detailed materiality assessment with a scoring system, which is based on a qualitative-quantitative approach. So we work with a numerical scoring system and also incorporate qualitative insights. As previously mentioned, we assess your sustainability impacts, risks, as well as opportunities. With the first step, the value chain approach, we make sure that sustainability risks and opportunities are not selectively assessed within one company department, but we focus on your entire business activities. And then in the second step, we jointly select the impact categories. This allows the company to set a specific focus and to be taken along on that whole process. And the method is adapted to the individual needs of the company. And we can cover social, environmental, governance, chemical, product specific, and many more topics also at a very detailed level. And in the most crucial, the third step, the evaluation within the materiality assessment is carried out by us at Leadership and Sustainability in collaboration with our clients' teams. To conduct it, we interview company employees, we look at documents and certifications and so on. We include our industry expertise and scientific papers, and we are always in close contact with the companies, with the client's project team. And after having conducted a detailed analysis of the sustainability risks and opportunities along your value chain, the hotspot topics are derived in a next step. So usually the detailed assessment is used for sustainability experts as it reflects your sustainability risks and opportunities at a very granular level. But the hotspot matrix is a summarized high-level sustainability risk and opportunity representation, which gives a good picture without an overload of details. And on this slide, you can see a screenshot of an example hotspot matrix, but please be aware that these numbers here, they are not real numbers at all. We have just invented them. And on the left side, you see example impact categories. On the top, you see the different value chain segments, and you can now see the hotspot risks that as they are represented on a scale 1 to 3, as well as hotspot opportunities. So at the end of the materiality assessment process, you will have a scorecard helping you understand your most significant sustainability risks and opportunities along your value chain. And of course, along with this hotspot matrix comes a presentation and a report and with highlights and with explanations about why some risks are more significant than others and why some opportunities are more significant than others, so that you can really act based on this report. So we have come to the nearly last section here. So to finish up this webinar, I want to give you an outlook on the CSRD and what benefits it will bring. The CSRD regulation requires a lot from companies. Therefore, we suggest starting to prepare as soon as possible. And this is how we suggest preparing. Familiarize yourself with the ESRS standards to ensure a seamless connection between the double materiality assessment and the reporting requirements under the ESRS. You may only need to publish your report in 2025, but if you haven't set up your system in 2024, you will be lagging behind with your report and not be able to comply with the requirements. Engage your organization and internal stakeholders early. Carrying out reporting on the ESRS requires collective efforts and involves multiple teams within your organization. So make sure you educate your teams also on the CSRD requirements and also have cross-sector teams for the data collection. So we know that there are some brands who are really great at working with all their different business departments, and this is where I see sustainability going. In order to be really effective in your sustainability programs, you need to have your champions in the different business functions as well to support your strategy. You cannot do it only from a central department. You really need your partners throughout your entire value chain. And then you analyze maturity, gaps and weaknesses and alignment with the ESRS of current reporting practices. And of course, you will also need to assess your existing data collection methods, the metrics you track, and the level of detail in your reporting as it is right now. Furthermore, identify materiality and stakeholders to ensure sustainability reporting is relevant for you and your stakeholders. So this is not something you can just take a generic approach to. You need to have done this work for your own company. You can also consult an auditor as the CSRD requires third-party assurance. Talking to an assurance provider beforehand, without of course them giving consulting, they are not allowed to do that, but they can give you the guardrails for how the assurance will take place. So that can help you also to get the required data processes and controls in place from the start that they will require to see. Then streamline data collection and monitoring and implement harmonized data collection processes that align with the standards. And then you can start writing the report in accordance with the guidelines provided in the ESRS 1. And lastly, you need to obtain that third-party assurance. And if we move on here and talk about the benefits of the CSRD, double materiality analysis can go beyond compliance with CSRD and become a starting point for strategy development to manage organizational impact. So why have many companies conducted their materiality assessments much earlier than what the CSRD requires? Well, that is because they understand that if you don't know where you are today, how do you want to define your strategy moving forward? You really need to know, what is my position today? Where are my big gaps? Where are my big risks? What are the opportunities ahead of me? And then the financial materiality provides also insights into the risks and opportunities and encourages, of course, a strategic realignment. The standardized sustainability reporting reduces the decision burden, which framework to choose, etc. And usually no ad hoc ESG information needs to be provided to different parties. However, I would say there are lots of different parties that may require information and data from you. And perhaps they sometimes have their own frameworks and they might keep them also along the way. So we cannot promise that you only have to report once and then it's done. And then we have the third-party verification, which ensures that you are meeting the requirements of the CSRD, of course, and ensures data integrity and transparency, as well as credibility with the stakeholders. Let me see. Can you still hear me here? I hope so. We can support you in the process of reporting under the CSRD with our services. CSRD workshops and trainings. We have internal training to facilitate internal engagement and education on CSRD and ESRS. We have double materiality assessments, carrying out the double materiality assessment for you according to the method I just described. And then, of course, we can also help you to develop your strategy based on the double materiality assessment and to set up your reporting. And finally, we can support you also with third-party assurance, either with limited or reasonable third-party assurance. However, currently the limited assurance is required by the regulators. And of course, we can help you with any topic-specific areas as well. And so why choose working with us? Our clients have benefited from our expertise in sustainability, in the sustainability area, our long experience in the consumer goods industry, our holistic approach to working, combining business and sustainability perspectives, and our experience from working within brands and other companies as well, and our wide range of services in the field of sustainability. And here you can also see some of our team members. Now we are around 60 persons globally within leadership and sustainability. And now I would like to head over to the question session. So we have another 15 minutes actually to cover your questions that you have. So let me see if there are any questions already. Yes, so the one question here, you stated listed companies. What about private limited companies, please? Yes, they don't belong to that group of listed companies, but to the next group, the non-listed companies. Yeah. Any other questions? Please take the opportunity to ask your questions. I know this was a lot of theory, a lot of information. Yes. What kind of expertise should have the ESG responsible? Well, it depends a bit on the type of your company and the size of your company, but you should have someone who has a sustainability degree or an environmental degree or a social degree, Or sometimes you also have people with a financial degree that have just learned along the way about sustainability. But I think what is important, especially if it's a person who shall coordinate the entire ESG work within your company, it's good to have someone with several years of experience in the ESG area. And then you said that the company should post the report. Where should we post it? Yes, I cannot tell you exactly where that is, and that will be communicated later by the European Union. It's not set up yet. Yes. Then will it be compulsory to publish the report on the organization website? No, I guess you would publish the report because, of course, you also publish your annual report on your company's website, but it will also be compulsory to publish it on the site that the European Union will make available to you. And I cannot give you any further details related to that right now. Yes. What abilities should my employees have to comply with CSRD? Is it HR work or technical departments? Yes, as I mentioned, it really depends on your company and it depends on the area. So the best situation is if you can have people from different departments in your company support you, because you will need people with HR experience, so the social side, and who understand employee engagement and different employee topics, but also the worker topics. And then you will need people also from the technical departments. If you have your own manufacturing within your group, you will need people also who understand your manufacturing. So it depends on the different topics and how you are set up, and then you need to see how you can build the team. And of course, when you start building, you take your first steps, and then you will need to expand over time as you go. Will there be sanctions for those organizations that do not comply? I guess there will be some type of sanctions, but I cannot say anything specifically about that. I haven't seen any information about that. Then, is there any structure body to follow in order to structure the report? Yes, so the ESRS in itself gives you a structure with the ESRS 1, 2, and then the topical standard. But of course, just to follow that structure might be very formal and a bit dry. So usually what we see, for example, and what we have seen with many companies that have been reporting according to the GRI, the Global Reporting Initiative, they have written the report according to what they think makes sense. And then they have made a mapping with the different GRI reporting requirements. And that mapping is, so to say, explained then towards the end of the report, so that you can have a report that is not only a list of different indicators or list of different topical information, but that is a report that also can be read by a person, you know, in a good way, and that has a good flow. Yes. And then we have a very specific question about the reporting, who it applies to. And I think we need to respond to that question offline, as I cannot take that right away. Yes, if companies are already reporting as per the GRI standards, do they need to meet the current and upcoming CSRD requirement? Yes. If CSRD applies to them, then they will need to report according to the CSRD and ESRS as well. Some indicators are overlapping between the GRI and the ESRS, but it is my view that the ESRS is more comprehensive. There are lots of different indicators listed in the ESRS, many, many, many indicators. But of course, then based on the materiality assessment, you may need to report only on a selection of these indicators. Do I have to report on supply chain related data, or is it just included in the materiality analysis? No, you will have to report on it as well. So you have the worker section, for example, and you also have in the environmental topic sections, there are also questions related to your supply chain. So you will need to report also about your supply chain and your suppliers and what you're doing in your supply chain. Yes. Yes. Okay. When is it considered a large company? Well, the first group of companies that will need to report, they have more than 500 employees and were already reporting according to the NFRD. And then I talked at length about the detailed requirements for each and every group of companies that need to report and when they need to report. So perhaps you can go back to the recording of that and listen again to that. We can also, and I think we shall actually do that in our question and answer document that we will make available to you. We will list that out, the different groups and what the timing is, so that you can find yourself in there. In governance, we should write about administrative performance for 2024, or we may say about the projects in development. You may also talk about projects in development. It depends a bit on which indicator it is. So it is not entirely clear cut there. Okay, any further questions? We still have a few more minutes to go. No? It seems that there is no more question coming in currently. Oh, yes. Yeah. Okay. Thank you. All right. With that, I thank you so much for joining this webinar, and I hope that it was valuable to you. And I also welcome you to contact us if you have any further questions. And we will be sending out the recording and the presentation deck to you, including a Q&A document where we also add the information about the companies that need to report and when you need to do that, depending on your size of your company. So with that, I would like to thank you again, and I wish you a great evening or afternoon wherever you are. Bye bye, and thank you so much.